Are you trading every day without truly understanding how the market actually works behind the scenes? Why do most traders lose money consistently, even after learning strategies, indicators, and watching endless trading tutorials online? Are you investing wisely, or just guessing price direction randomly, hoping the market moves in your favor every time?
Forex, crypto, and stock markets look similar, but they actually follow completely different rules, structures, and trading behaviors. What if your biggest mistake is not your strategy, but using the wrong mindset in the wrong type of market?
Chasing fast money feels exciting, but it often destroys your trading account faster than any bad strategy ever could.
The market is not against you. Your own decisions and emotional reactions are the real reason behind most losses. Without understanding risk, leverage, and structure, every trade you take becomes closer to gambling than real trading. Professional traders focus on survival first, while beginners chase profit first and end up losing everything quickly. If you understand this today, you can completely change your trading journey starting from this very moment forward.
In Forex trading, you never trade a single currency alone, because every position always involves two currencies paired together.
One currency is called the base, and the other is the quote, creating a direct relationship that drives price movement. When the base currency strengthens, the quote weakens, and this interaction creates constant movement inside the Forex market. This continuous interaction between currencies is called fluctuation, and it is the core reason behind market volatility. Unlike stocks or assets, Forex is not for long-term holding, because you cannot personally own global currency. You are not investing in Forex. You are predicting whether price will move up or down within a short time frame. That is why Forex is known as a trading market, not an investing market like stocks or long-term financial assets. Every trade you take is based on probability, not certainty, because the market never guarantees any fixed direction at all.
If you treat Forex like a guaranteed system, you will lose, because uncertainty is built directly into market behavior.
To survive in Forex, you must understand fluctuation deeply, because controlled trading depends entirely on managing these movements.
Most traders focus on winning trades, but professionals focus on managing losing trades first.
Forex market is not about prediction certainty. It's about probability and disciplined execution over time.
You cannot control the market direction, but you can always control your risk and your reaction. Short-term trading attracts beginners, but long-term consistency is what actually builds real wealth.
Crypto allows both investing and trading, but confusion between them is where most beginners fail.
Spot trading means ownership, but futures trading only means betting on price movement direction.
In futures trading, you don't own the asset, you only predict whether price will rise or fall.
High volatility creates opportunity, but it also increases risk, making discipline absolutely necessary for survival.
Most traders lose because they rush for quick money, without strategy, patience, or proper risk management.
Trading without a plan is like gambling, because every decision becomes emotional instead of calculated and controlled.
Discipline matters more than strategy, because even the best strategy fails if you cannot follow it consistently. Revenge trading destroys accounts, because emotional decisions always ignore risk and lead to bigger losses. Smart traders accept small losses early, because protecting capital is more important than chasing big profits. Consistency in trading comes from repeating a proven process, not from chasing random opportunities every day. Market rewards patience, because waiting for the right setup is better than forcing unnecessary trades.
Risk management defines survival, because one bad trade without control can wipe out weeks of progress.
Professional traders think in probabilities, not certainty, because no trade outcome is ever guaranteed.
Overtrading reduces accuracy, because too many trades increase emotional pressure and reduce decision quality.
Successful traders focus on long-term growth, not short-term excitement, because real wealth builds slowly over time.
Most beginners ignore process, focusing only on profit, but without process, consistency becomes impossible over time. Capital preservation is the first goal, because without capital, you cannot survive long enough to grow. Trading success is built slowly, because skill, discipline, and experience require time to develop properly. Fast money mindset leads to fast losses, because rushing decisions removes logic and increases does not reward impatience. It rewards discipline, patience, and consistent execution over long periods. Your mindset controls your results, because trading decisions come from psychology, not just tech.
Losing is part of trading, but failing to learn from losses turns temporary setbacks into permanent damage. A simple strategy executed consistently beats a complex strategy applied randomly without discipline or structure. Every trade carries risk, so controlling position size is essential to protect your account from major drawdowns. Consistency, patience, and discipline together create success, because trading is a long-term game, not quick money. Most beginners chase profit size, while professionals prioritize risk control, because survival always comes before consistent profits.
Markets don't reward predictions, they reward execution, because even the best idea fails without proper discipline. Every profitable trader follows a system, because random decisions create random results and unstable performance.
You don't need many trades to win, because a few high-quality setups can outperform excessive low-quality entries. Patience protects your capital, because waiting avoids unnecessary risks and improves overall trade accuracy significantly.
Fear and greed control most traders, but controlling emotions is what separates amateurs from professionals.
Avoid over-leveraging your account, because higher risk exposure increases the chance of total account loss quickly.
Winning streaks can be dangerous, because overconfidence often leads to bigger mistakes and unexpected losses.
Losses are part of the process, but controlling loss size determines whether you survive or fail in trading.
Focus on process over profits, because consistent execution will eventually generate results without emotional pressure. Stop trying to recover big losses quickly, because aggressive recovery usually leads to even deeper losses. Small, consistent gains build strong accounts, because compounding works better than risky attempts at fast profits. Market volatility creates opportunity, but without discipline, that same volatility becomes a major threat. Professional traders protect downside first, because controlling losses is the foundation of long-term profitability. Trading is a game of patience, because waiting for high-probability setups improves accuracy and reduces after profits is dangerous, because it pushes traders to increase risk beyond safe limits.
Every trade should have a plan, because entering without clear exit rules leads to emotional decision-making.
Risk-to-reward ratio matters, because one good trade can recover multiple small losses effectively. Consistency beats intensity, because steady execution over time outperforms random bursts of aggressive trading. Success in trading comes from discipline, patience, and control, not from luck or chasing fast money.
Your first goal in trading is survival, because without survival, long-term growth is completely impossible.
Most traders fail due to poor psychology, because emotions override logic during both profits and losses. Stop focusing on daily profits, because long-term consistency matters more than short-term performance fluctuations. A good trader waits more than they trade, because patience filters out low-quality opportunities automatically. High-risk trades may look attractive, but controlled risk is what keeps your account alive longer.
Losses cannot be avoided, but they can be managed, because controlled losses protect overall account growth. Your trading edge comes from discipline, because strategy alone cannot generate consistent results without control. Market rewards consistency over time, because repeated execution builds reliable and predictable performance. Quick profits create false confidence, because short-term success can hide long-term weaknesses in strategy. Mastering trading takes time, because real skill develops through experience, patience, and consistent learning.
Trading success depends on consistency, because repeating a proven system builds predictable results over time. Without proper risk control, even a strong strategy fails, because one loss can erase multiple previous gains. Discipline is the real edge, because controlling your behavior matters more than finding perfect trade setups. Market movement is unpredictable, because price reacts to global forces beyond any single trader's control. Patience gives you better entries, because waiting allows high probability setups to form naturally over time. Emotional trading leads to mistakes, because fear and greed distort decision-making under pressure. A clear trading plan reduces stress, because defined rules remove uncertainty during active market decisions. Compounding growth builds wealth, because small, consistent gains increase exponentially over longer time periods. Overtrading increases losses, because too many trades reduce accuracy and increase emotional fatigue quickly. Long-term focus wins in trading, because sustainable growth always beats short-term excitement and risky decisions. Most traders quit too early, because they expect fast results, instead of understanding the time required for mastery. Trading is a skill, not luck, because consistent results come from learning, practice, and You cannot control outcomes, but you can, because risk management dull risk. Focus on process daily, because consistent habits create results without relying on unpredictable market movements. Big profits are the result of small steps, because steady growth compounds into significant long-term returns. Every loss teaches something, because mistakes reveal weaknesses that must be fixed for future improvement. Every loss teaches something, because mistakes reveal weaknesses that must be fixed for future improvement. Your mindset shapes your results, because disciplined thinking leads to better decisions under market pressure. Stop chasing perfection, because no strategy wins every time, but consistency still leads to long-term success.
Your goal is not to win every trade, but to grow your account steadily over time with controlled risk. Master the process, control your risk, stay consistent, because that is how real traders build